Dubai real estate, the best investment in 2025? See the RealtorX research.
Imagine a real estate market just defying global trends, where deal volumes are shattering records, prices keep climbing, even when things elsewhere are turbulent. That's the really fascinating story we're diving into today. Welcome to the deep dive. We take a stack of sources, pull out the key insights, the nuggets of knowledge specifically for you.
And today, our focus is squarely on the Dubai real estate market. It's quite the standout, a really compelling case study in urban development, but also economic resilience. It's remarkable.
Absolutely. And this deep dive, it's based on some comprehensive market analysis, various reports, giving us a snapshot of right now, and also looking ahead a bit. Our mission really is to uncover what's truly driving this dynamic market, give you a shortcut to understanding why it's so exceptional and what it might mean for you.
Okay, so let's unpack this. The numbers are, frankly, pretty jaw-dropping. Reports show July 2025, the deal volume hit a record AED 65 billion.
65 billion
Yep.
in 1 month.
In 1 month. That's a 29.5% increase in value and nearly 25% increase in volume compared to July 2024. Total transactions just for that month, over 20,000.
Wow. Those are staggering monthly figures. But what about the bigger picture? Prices, were they keeping pace or even faster?
They were definitely climbing. The average price per square foot rose to AED 1,649. That's up a solid 9.5% year on year.
Okay.
And if you zoom out, first 6 months of 2025, total residential sales topped AED 262 billion. That's a 36.4% jump year on year. Huge. Nearly 92,000 transactions, up 23%.
Right. And what about the type of property, off-plan versus ready?
Yeah, that's insightful. Off-plan properties still dominate, like over 70% share. But demand for ready properties is also growing strong.
Yeah.
27,400 deals, up 10%. So not just speculation, it shows deep, broad demand.
And looking back at the 2024 snapshot, I think it was Deloitte data that seemed to really confirm this momentum. What jumped out at me was the growth pretty much everywhere, residential, office, even hotels.
Exactly. Average home prices in 24 grew 20%. Rental rates up 19%. Office spaces weren't far behind, a 17% price increase. And hotels, average occupancy hit 78%. Impressive.
Yeah, it really is. These aren't just big numbers in isolation. They paint a picture of, extraordinary growth, broad-based demand, almost counter-cyclical to what we've seen in many other major cities globally.
Precisely. It's quite something.
Okay, so let's dig into the segments. What's driving each one? Residential first. We heard the 20% price growth, 19% rental growth for 24-25. But here's what gets really interesting, I think. There are, 61,800 new units under construction? How is the market absorbing that much new supply without prices just stalling? Or even falling, let alone growing?
Yeah, that supply absorption is absolutely key. And the insight here isn't just that demand is keeping up, it's how. Dubai seems to have engineered this self-reinforcing loop, sustained population growth, strategic infrastructure development. It turns what would normally look like oversupply elsewhere into, a sign of market maturity, investor confidence.
Confidence, okay.
Especially when you factor in the average yield 6.7%. That's attractive. The outlook is projecting stable growth, maybe 6-10% annually for residential. Yeah. So they expect this absorption to continue.
That makes sense. It's systemic factors, not just raw numbers. Okay, moving to office real estate. Rental rates also saw significant growth, 17% in 24-25. Occupancy over 95% in the premium buildings. What's behind that sustained demand?
It's largely multinational corporations.
Yeah.
MNCs, they're looking for quality space. And there's actually a limited supply of these really top-tier premium buildings. That naturally pushes up rates, pushes up occupancy. It's a clear signal. The Dubai isn't just attracting residents, it's attracting global businesses, setting up shop or expanding.
Right, a flight to quality almost. And the hotel sector.
Yep.
Also booming, 78% occupancy, tourist numbers up 9% to nearly 19 million visits in 2024. How does that translate into revenue? What's the outlook there?
It translates very well. We're seeing new hotel brands developing.
Yeah.
And RevPR, that's revenue per available room, is up 1%. So hotels aren't just full. They're effectively monetizing that increased tourism. It fuels the whole hospitality ecosystem.
Okay, and retail. Projecting 6% growth in spending from 25 to 27. What are the key trends shaping retail?
The sources point to shifts towards omni-channel, click and collect, online driving offline, and also community retail models. Smaller format centers, more localized. It's just, an evolving consumer, moving beyond just the mega malls to more integrated experiences.
Interesting. Localized focus. And then there's logistics and warehousing. A huge 28% rental rate increase in Jebel Ali Free Zone, driven by e-commerce, third-party logistics, 3PL companies. More expansion expected in Dubai South, Dubai Investment Park, DIP.
Right, and this diversified growth, I mean, across all these segments, it really raises an important point. What does it tell us about the overall health of Dubai's economy? It strongly suggests a broad-based economic strength, not just reliant on one or two things. That resilience is a core insight here.
Yeah, diversification seems key. So, if the market's absorbing all this growth, what are the main engines, the core drivers? My sense from the material is demographics. Migration, that seems huge. Dubai's population grew 5% just last year to 3.8 million.
You've absolutely hit on a crucial point there, that population growth directly fuels demand. Housing, offices, retail, everything. But it's not just organic growth. You've got the Golden Visa program playing a big role.
Yes, the 10-year visa.
Exactly. For property purchases of AED 2 million or more, it's been very effective at attracting affluent investors' families, particularly from the GCC, from Europe. It creates a consistent stream of new residents, new capital.
And we shouldn't forget the Expo legacy either, right? That site turning into District 2020, plus the infrastructure in Dubai South making those newer districts much more attractive, creating new economic hubs.
Absolutely. And underpinning a lot of this is the regulatory environment. Things like mandatory escrow accounts, digitalization of transactions, better market transparency from the Dubai Land Department, the DLD.
Right. How significant are those regulatory changes?
They're incredibly significant. What's insightful isn't just that they streamline things, they effectively de-risk the market. For investors who might otherwise see it as volatile, this builds real trust. It directly contributes to that sustained foreign capital inflow we're seeing beyond just the appeal of high returns.
Building trust. That makes a lot of sense. Okay, but every market, no matter how strong, it has potential headwinds, risks. What should we be aware of here? My first thought goes back to that growing supply you mentioned earlier.
That is a key consideration, definitely. The reports indicate first half of 2025, 300 new projects launched. That's nearly 88,000 units in total.
Wow.
So this large influx could potentially slow down price growth if demand doesn't keep pace everywhere in specific locations. So careful market monitoring becomes really crucial.
Location, 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 as always. And what about construction delays? The data showed only about 21% of projects are over 75% complete. That seems low. Creates uncertainty about timelines, doesn't it?
That's a valid point, yes. It introduces uncertainty. And actually, when you layer that on top of the bigger macroeconomic challenges, which are always out there, things like global interest rate hikes, oil market fluctuations, geopolitical events, these are the external factors that could influence even a booming market like Dubai's. They could potentially impact foreign capital or project delivery schedules, things to watch.
Okay, so bearing those risks in mind, let's look ahead. Prospects for 2025-2026. What's the general forecast?
Well, the residential market is forecast to see average annual price growth of around 6–10%. The luxury segment, potentially even stronger, maybe up to 15%.
15% at the top end.
Yeah, and office and warehouse properties expected to maintain pretty strong demand. The hotel sector should continue benefiting from growing tourist numbers.
Okay, but it's important to note moderation is possible, right, as these big residential projects get completed and handed over. That makes sense with the supply pipeline we discussed. It's a balancing act.
Exactly. It's a delicate balance. Now, for you, the listener, trying to understand or maybe even engage with this market, we've pulled out some key recommendations based directly on the source material.
Right. So what does this all boil down to for someone looking to get into this market or just understand it better? These are concrete strategies from the reports. First up, off-plan opportunities.
Yes. The sources suggest looking at off-plan projects in areas like Arjan, JVC, Dubai South. The potential benefits there are flexible payment plans and the possibility of capital appreciation when it's completed.
Okay. And for ready properties?
The report suggests considering ready villas and townhouses, places like Dubai Hills Estate, Arabian Ranches, the Valley, especially for families, citing high rental demand. So that's maybe for different type of investor or resident. Immediate occupancy, stable rental income.
Got it. And diversification. Always smart.
Always. The sources advise considering commercial real estate, maybe in Business Bay or DIFC, and also industrial assets in JVZ and Dubai South, broadening exposure beyond just residential.
Right. And the final point seems crucial, especially given the pace of development.
Due diligence. Absolutely key. Monitoring schedules for new unit handovers, project readiness. The goal is to avoid potentially saturated locations and, mitigate those risks of construction delays we talked about.
Yeah.
It helps you navigate the market's dynamism effectively.
Makes sense. Now, beyond the numbers, there are some interesting future trends emerging too. Things shaping how Dubai builds and grows.
Yeah, definitely. PropTech solutions, property technology that's becoming increasingly integrated. There's also a growing emphasis on ESG factors, environmental, social, governance, driving more sustainable, community-focused developments. And related to that, an evolution towards more community-oriented living formats overall.
Okay, so to wrap up our deep dive here, the Dubai real estate market shows, well, remarkable resilience, and it's clearly maturing.
Yes. The key takeaway really seems to be that combination. Progressive regulation, those attractive visa incentives, strategic infrastructure projects, it all keeps drawing in both local and international investors, creating this quite unique market environment.
And that balance, as you said, between the growing supply pipeline and the strong regulatory framework,
Yeah.
that's going to be crucial. That'll likely determine price dynamics in the coming years. All right. And for a final provocative thought for you, our listener, to mull over. Given Dubai's really aggressive focus on tech integration like prop tech and this push towards genuinely community-centric living, what existing city, maybe one struggling with its own urban development challenges, could actually learn the most from Dubai's specific approach? Something to think about.